Hello everyone, hopefully you're having a great day. I quickly wanted to talk about early investing, and I wanted to talk about two types of investment strategies that a lot of people tend to invest their money into. The first is individual stocks, and the second is ETFs or exchange traded funds. So I wanted to talk about the pros and cons of each, and maybe I could help you make a conclusion as to which route you want to take if you want to start investing. So how I like to think of an individual stock and an ETF is like this. Think of a stock as betting on one player from the Argentina team to score 3 goals. Let's say Messi, for example. Whereas another person bets on Argentina as a whole to win the game. If Messi does not score those 3 goals, you lose everything. Whereas if he does score those 3 goals, you make a lot. Whereas in comparison, if Messi doesn't play, Argentina can still win the game because of the diversity they have on their team, right? They have a player that can replace Messi and so forth. Or they have other players that could pick up the slack in case Messi doesn't perform at his best. So that's kind of the idea. A stock, you're putting all your chips in one specific company, and you ride out the highs and lows of that one specific company. Whereas an ETF consists of many different stocks, which not only diversifies your portfolio, but it also mitigates that risk a little bit in case one company doesn't perform at its best. When it comes to stocks, you'll get a lot more higher returns because you're 100% committed to that one stock. Let's say if Nvidia jumps 20%, your whole portfolio will jump 20%. Whereas if you were to invest in an ETF that consists of Nvidia being in that ETF and it goes up 20%, your ETF as a whole won't rise 20%. It'll only rise a specific percentage in regard to how much of that certain company your ETF has. An individual stock can give you higher returns. It could also give you higher losses. A stock individually is very, very volatile, which is why not a lot of people recommend it. People consider it a gamble, and at the end of the day, a lot of companies may end up failing in the future or may end up not performing as well as they used to in the past. So it's definitely a lot more of a higher risk, which is why people tend to lean towards ETFs. Keep in mind, I'm not a financial advisor, but if you were to buy individual stocks, I would only buy them if you completely trust the company and its fundamentals. It has a financial record to back how good they are as a company. An example could be the Magnificent Seven, right? Amazon, Meta, Google, etc., Microsoft. And I would also buy it if you're a bit younger of an age. And the reason I say this is because as you get older, you want to eventually end up retiring, so you have a nest egg to pull from. Having individual stocks at an older age increases risk, which could also hinder or prevent you from retiring at the age you want to retire because of the market swings. And let's say another market collapse happens, or another pandemic happens, or another deep seek happens. The last thing I recommend doing if you end up buying individual stocks is I would only do it if you're able to accept the volatility of a stock going up and down. If you constantly check your phone when it comes to stocks, and one day you're looking at your phone and a company drops 10% and you get nervous and you panic, buying individual stocks may not be for you. I can give you a personal example of mine. I still have it actually to this day, but a company called Supermicro, SMCI, about a couple years ago was soaring. It was on the upward trajectory right there with Nvidia. I think it hit about 1,000 and then it split. It did a 1-to-5 split, if I'm not mistaken. I was a part of that. I kind of bought it when it was about the $950 a share range. I bought 4 of them. And then after Supermicro got hit with audits, financial audits, there were articles about them illegally selling servers to China, and there was a whole bunch of backlash back and forth, and the company ended up dropping tremendously. And I think right now it's between $25 to $30. Very, very volatile, but I have to bite that bullet, right? I'm not going to sell it. So I gotta hang on to it and sell it either when it surpasses the value I bought it at, or when it breaks even, so that way I could take that money and reinvest it somewhere else. If you're willing to do all those things and you're also willing to constantly keep track of a company's fundamentals and moves, I definitely would recommend buying individual stocks. If you meet all that criteria, you're patient, you have faith in a company, you're young, you're willing to put in the work and the research, I wouldn't mind investing in individual stocks. But it is difficult. I promise you that, because that's what I do. Now onto the ETF side. I talked about it earlier. It's a basket of individual stocks into one specific ticker symbol. It allows for your portfolio to be diversified. It allows you to do less research because there's so many companies within an ETF. You don't really have to worry too much about an individual company performing or underperforming. And it's not as volatile. A lot of the times an ETF year-over-year return is likely within the 5 to 15% range. Sometimes you'll get lucky and it'll shoot up, like QQQ or VTI. Those are a couple companies. At least for the most part, it is relatively stable compared to individual stocks. The only downside if you are a penny pincher is that some ETFs require you to pay an expense fee, which is very, very minute. And I'll give you an example. The ticker symbol VOO charges a 0.03 expense fee per year, which means that for every $1,000 you put into that company, you're paying a 30-cent fee. That is just an example. Another downside, if you want to make money, I'd say quickly within a period of time, is that the returns, once again, are not going to be as high in a majority of ETFs as an individual stock. If you want an example, pick any ETF in the stock market and compare it to Rocket Lab, or compare it to NVIDIA, or compare it to AMD, or any of the memory stocks, Micron, SanDisk, Western Digital, etc. And you'll see that large gap. That is the sacrifice you make when you put money into an ETF. You're sacrificing high gains at a fast rate versus more consistent gains at a slower rate. I recommend buying ETFs if you're relatively new to investing. You don't really have time to put in the research for all these stocks. And if you're a bit older, so that way you can kind of secure your retirement and you're not taking as much risks, because putting in a high amount of money at an older age is definitely a lot more riskier than putting a lot of money in when you're younger. But once again, I am an individual stockholder. I used to invest in both. I used to do like a 70-30 split between individual stocks and ETFs. I used to invest in QQQ, VOO, Hack, SPY. There was a lot of overlap in some of my ETFs, and I realized that the gains I was making with these ETFs, in my opinion, was not enough to my liking. So what I did was I sold them and I allocated all those funds into a majority tech, memory, cybersecurity, and energy stocks. And so far, I'm pretty satisfied with the amount of money I've been able to accumulate over the past, I'd say, 2 to 3 years of investing. In August, I'll be dropping a video showing you the growth I've made from the beginning of this year up until now. And I look forward to explaining to you guys some of the things that have happened during that time frame of about 3 to 4 months, and some of my higher performing stocks and some of my lower performing stocks. So I'm definitely going to do that in the future. But I appreciate you guys watching my video and listening to the information I provided you guys. I hope you guys learned a thing or two. If you guys have any recommendations as to what stocks maybe people should invest in, or what ETFs they should look into, drop it in the chat. I appreciate your guys' time, and I'll see you on the next one.